Because Bob is trying to take Circle public via SPAC, which makes the USD largest stablecoin, right, Bob? Does this legislation influence your timing?
We still hope to have our SPAC approved in the fourth quarter, but timing is very difficult. I don't think the legislation around regulation has a direct impact on the approval of our DSPAC. But of course, Sarah, all of us are looking forward to the development of a smart regulatory framework, particularly around stablecoin, but frankly around many areas of digital and crypto.
Should they be regulated like banks, by bank regulators like the Fed, or by the SEC?
Listen, I'm going to leave that to the legislators. I think we do. One of the things that's been very, very clear within the group at Circle, both before our involvement and today, is we embrace regulation. We have set ourselves up as the most conservative, the most regulated, operating within the U.S. regulatory parameter. Very, very clear on our portfolio, standing behind our stable coins, which is, as you know, 80% U.S. Treasury T-bills, 3 months and below, 20% cash, or a dollar's a dollar's a dollar. And I do think regulation around a stable backing to stable coins is important.
Bob, people don't have a lot of trust and faith right now in SPACs or in crypto and stable coins. Are you going to get this deal done?
I don't think that's true. I think clearly the new issue market in SPACs is at a crawl, if even that. But this is a SPAC that we had announced, or a merger that we had announced about a year ago, and we're working our way through the regulatory process. So we don't think what's the disruption in the new issue SPAC market is going to have any impact on that at all. And in terms of stablecoins, Sarah, I mean, think about Circle, right? When crypto winter hit, these are rough numbers, but the market cap of crypto is about $3 trillion. That dropped very, very quickly to about $1 trillion. During that period, Circle raised private money at the highest level that they have ever raised it, and the outstanding USDC went from just under 50 billion to where it is today, about 55 billion. So within that,
so you distinguished yourself.
I'm sorry?
So you guys distinguished yourself against the Terras, the blow-ups.
Yes, particularly within the stablecoin universe. Yes.
Got it, Bob. I wanted to ask your general thoughts about the economy as well. Do you buy this idea that we can't have a recession with the unemployment rate in the 3%? The White House's their new line is that yes, technically 2 negative quarters of growth is recession, but it's really up to the NBER to define a recession, and they're not going to do that if we have such a robust labor market. Is that true?
Well, we all know the inflection point was hit in so many of the indices in March and April, about the time the Fed became a bit more aggressive. But you still have sectors like autos, housing. You have a buildup in inventories, and you have an unemployment rate still around 3.6%. You kind of think of this as the full employment downturn. And I do believe, as you had said earlier, that the Fed needs to be more aggressive, not less aggressive. My own view is that 100 basis points would be the correct, July 31st call for the Fed in terms of rates. But generally, while we have begun to come off the top, and we're past the inflection point, the demand that was built up with the fiscal stimulus and the monetary stimulus, and the fact that the Fed waited so long to stop buying U.S. Treasuries and mortgages means that they need to get ahead of this now. So we need a Fed that's more aggressive, not less aggressive. And my own view is if they do 100 or a bit more aggressive, it'll actually make this easier in the long run. And the longer that they wait to become more aggressive, the harder it is to get a 9% inflation world tempered down.